Guys, welcome to another deal of the week. We're here with Andrew. We're going to look at a property in Cleveland metropolitan statistical area. I think it looks like
the statistical area.
Yeah, it looks like
Where is
Cleveland
that?
Heights, which is an east inner ring suburb. We have a lot of properties there.
Yes, we own property.
Yes, we own a lot of properties there. So welcome to Deal of the Week.
So the big thing that we're doing on Deal of the Week is we're going to sit here, underwrite properties so you can see, one, how we're looking at deals, how we're assessing deals. But part of the fun and the magic is from beginning to end, you're going to figure out what we're looking at, why it's exciting, what's good about it, what's bad about it. And at the end of the day, Paul's magic price. What does he think it's worth?
Remember, this is a very high level view. We're not here to sit there and go, so guys, one of the things we do is the same as we do for our stocks. I start with a high level view, and is it in the ballpark? If we're in the ballpark, we do more detailed view. But if we're not, so let me tell you a story. 10 or 12 years ago, we bought 7 homes in Cleveland Heights. I bought them from a gentleman that I knew through a friend. They invested during the real estate crash. They bought a bunch of houses, and these houses were all in Cleveland Heights.
This is so weird you're bringing this story up right now.
Why?
The house that we're going to look at today is on one of the streets, and I'll give you a clue. You can't see it. I blacked it out, so you don't know. We own 2 homes on that street. Oh. That's a little clue for you.
Yeah, I don't know if I remember those addresses as much.
I was going right back so you could go into it.
Go ahead. We own 2 homes on this property, on this street.
Why don't you continue?
So, and the reason I bring this up is, even though I say, see, we're in the ballpark, and I say do more work then, I'm still not doing a ton of work. So this guy was selling the properties, and he paid like $92,000 a house for this thing. And we were in contract at 42 or 45.
Which at the time was a lot more than we had been buying homes for in the past couple of years before that.
Well, it was like 2000. What year was that? 2012 or 13?
I was going to say it's 13. So it's kind of just post-bubble a little bit.
So during the bubble, we were buying homes for between $1,500 and $15,000 a house.
And I know that sounds crazy. Just ignore those numbers if you're listening to this in California, Georgia, Florida, New York.
Well, if you're in
that's not happening.
If you're in California, then there's other issues we have there. So anyways, the guy takes me on a tour of the houses. We came up with a number that made perfect sense to me. Well, I knew the number was so cheap. I'm like, I don't need it. All I need to worry about is the house falling apart. So we go to the first house. I walk through the kitchen. I go upstairs. I literally spend maybe 150 seconds in the house, 2.5 minutes. I go, okay, ready to go. He goes, wait, don't you want to do more research? I go, no, the house isn't falling apart. He goes, well, don't you want to inspect this? And the other, I'm like, how much inspection do you do when you're buying it for $92,000 a house? I go, I'm buying it for 45. We're okay here.
So you hit him with how'd that work out for you?
Yeah, how'd that work out for you doing all that research? Guys, at the end of the day, do all the research you want. But if you're overpaying, you're still overpaying. That's
and so just like we talked about this the other day.
And if I was paying $1 for it, I probably wouldn't even visit the properties. Because if a property was crap, I'd have said, okay, city, take it over. You're fine. I wouldn't have cared.
So I say, when do you make money when you're buying stock?
When you buy the stock.
Not on the sale. Right?
Same thing here.
Exact same thing on the real estate.
I have no clue what those houses are worth right now.
So we're about to get a little clue today.
My guess is, well, this is a 3-family, it says.
Very good.
That's
different.
You
pick things up quickly, Paul.
Where it says number of units. Those houses were all single-family homes.
Yeah.
If I were to guess, I think...
You're going to do a preliminary guess and then...
No, on those houses.
Okay.
On the houses we own.
Yeah.
150?
Yeah, that's fair.
But we put probably 20 into each one.
And we did that over time because when we bought them, like you said, they were livable.
They were, by the way, they were
we
all
didn't
leased.
have to do anything.
Vacancy.
Right. So over time, as things happen,
so
we put a roof
45.
on some. We've done kitchens and bathrooms.
We bought 45. We put 20 into them. We're in it for 65. They're probably worth 150, and they've been generating cash flow since.
Yeah, we're renting somewhere between 1,000 and 1,500.
Oh no, 1,000's low. We're not renting anything in the 1,000.
Well, when we had one of the oldest homes that hadn't been rehabbed at all, because we had the same tenant for 7 years.
Oh yeah, that's different.
Yeah, we didn't pump it up as much because the house needed somewhere. It needed that kitchen and bathroom. It needed the touch.
So I want to repeat to everybody. Do all the research you want. If you pay too much, it doesn't matter. It does not matter. If you pay very little, don't do any research. It's just stupid at that. I don't really mean don't do any research, but the point I made was you offer me. I remember when we were buying houses in the .com, I never went and visited a single house. It was all you and Darnell.
Correct.
I'm like, is the basement falling in? If the answer is no, we are buying the house for $2,000.
Yes.
I don't care. I cannot not make money at $2,000 on a house.
And we were throwing offers out, probably 4 or 5 offers a week.
Oh, no, more than that.
And closing on 1 a week for a year.
Yeah, for a year and a half.
Yeah.
So anyhow, oh, well, it says right here, directions between Compton and Taylor.
Well, I guess I didn't lock them all out, huh? Who's doing the editing over here? No, that was
All right,
definitely me.
so 3 unit here. 10 total rooms. Rooms? Okay, that's kind of small.
Well, remember, a lot of this, you're looking at a printout right now, Paul, the MLS, right?
Yeah.
So a lot of this is set for single family, and they're just filling the blanks that agents are using. And so sometimes the investment property doesn't fit the template of the other ones.
Got it. So let's look at some of these pictures.
Look, some of the things we're trying to do today, we're trying to figure out another fun thing that I'd like to get into is the idea of why triplex, why quads, why do people want to look at those versus single family?
Oh, look at those cabinets. The backsplash isn't bad. The cabinets are bad. So the reason being is when you have all units in one area, it's easier to manage.
And now you get 3 units making money under the cost of one roof.
Oh, it's a good looking floor. Oh, look at the tile. It's so, oh boy.
So when we were looking at the 7-unit portfolio that we
7
bought.
houses, yeah.
Yeah. How does this compare?
This is better.
I think so too.
Yeah, this is better. We had to put a lot
Because there's
more.
been some rehab here. They clean the floors up. There's fresh paint. There's new
look at that.
tile. So go back 1. Perfect. Okay, so you've got first floor unit, second floor
Are
unit.
they looking for the, are they
and
going
the
for the English
studio
garden?
is on the 3rd. The English garden. That's cute.
All right. So how many bedrooms on the first floor?
Okay, so look at the middle here. We got
there
unit
it
1, 2, 3. See the top floor?
Yeah.
That's the 1 bed, 1 bath. That's a studio up there. And if you click forward 1, you'll see that kind of slanted ceiling. Your kitchen's kind of in your living room. It's a studio.
Does POS compliant mean piece of shit compliant or something else?
Don't, Paul. No, point of sale. You know that. All right, back. So what's a point of sale?
Point of sale is the list the city tells you, you must do this in order to sell the property.
Yeah, and if you don't do it, you can still sell the house, but that means the buyer has to go do everything on the list and have the city come in and look at it.
So why are we looking at this picture still?
Go to the next one, I said. That's when you're going up to the efficiency upstairs.
What do you think the efficiency rents for? Oh, look at that flooring.
I mean, it's still an efficiency, and you're on the top. But I feel I feel like you might be able to get $550, $600 out of it.
Okay.
What were you thinking?
Yeah, it sounds about right. So what about the first floor 2-bedroom? This says 900. There's no way.
So these are currently rented for that. These are existing leases.
Oh.
Now, just because they're existing leases doesn't mean that the current landlord is actually renting them at the right amount.
Correct. Actually, in most cases, guys, especially on older properties, landlords suck at raising rents. Because I'd rather have the property full and their rents are 40% below market. Idiots. So
we just mentioned we've got a lot of property right next to this, right?
Yeah.
And ours are rented for about what?
yeah, but it's a single family home.
Correct. It's single family. And they're 3 beds.
Yeah.
So we know, okay, that's the top. We're not going over that. So if we use that, what are we renting for?
So I think a 2-bedroom here that's renovated should be $1,250.
I think I might go 1,100 to 1,250.
That's a big range, Andrew.
It is.
1,100 is
Again,
Okay.
It's depending on how nice the renovation
So
is.
let me interrupt
You
real
talked
quick.
about doing some other stuff in there, right?
Yes. Interrupt real quick. Guys, next Wednesday, June 28th, we have a webinar about real estate. Sign up below. It's absolutely free. All you do is sign up. We talk more about real estate. We are adding more real estate to our channel, so please do it. 1,100? Man, that's just poopy.
Low-end 3-bedroom singles are still going for around 1,100, 1,200.
Based on what those people are charging versus what they can get.
I get it. I get it.
Guys, just know one thing. Most landlords do a terrible job of raising rents.
And this is when we talked about, we'll go into the underwriting, and Paul saying, just because we pick a number doesn't mean that's has to be what it is. Again, it's an art. We're going to sit there and say, I think it's going to be this, and we'll even fight a little bit about what we think some things can rent for or what it's worth.
All right, so I'm going to put this in Real Estate Calculator. Guys, if you have our software, Real Estate Calculator will be included in the software for you. But once Real Estate Calculator is done,
Yep.
it's a brand, you have to buy it separately. So if you buy the full software now, you get Real Estate Calculator included. Everythingmoney.com. Check it out.
And I've been working with it for the past week.
How's it going?
It's awesome.
Is it awesome?
There's some cool stuff in it.
It's even better than
Everyone's
this
gonna
one.
like it. Oh, it's better than this one.
Well, suck me sideways and call me Betty. I like that.
All right, Betty, let's do this.
All right. Deal of the week. Address, Compton to
Okay.
Taylor, Cleveland Heights,
By the way, I'm not trying to be mean. It just makes it sound like it's in a terrible area, right? It doesn't.
Say you have Compton.
There you go.
3% appreciation, 8% vacancy. I'm just going to put a number in here just to start.
And I know we're flying through things, so as you're putting some numbers in, I'm going to talk the 8% vacancy again. A bank doesn't lend on 100% occupancy. You're always taking something out because there's always going to be a couple months where you're missing income, where you're trying to lease it up or you're turning it and cleaning it.
Even if it's full for 2 years and then you have a vacancy for 3 months, you have to amortize that out.
Correct.
So I'm just putting 8% in there. Purchase price, I just put in $350. Cost to sell. When you sell this thing, you're probably going to pay 6 or 7%.
You got to pay a realtor.
Yeah. And I'm doing a 20-year analysis. Cap rate upon sale. So what's the cap rate going to be? Cap rate is net income divided by your sale price. For a single-family home, 6% tends to be about where it falls. It's pretty low.
And the idea of doing a single family when you do a sale, sometimes it's tougher because you might not be selling that home as a single family investment. You might be selling it to someone who wants to live there. So the cap rate, it just doesn't mean as much. This being a triplex,
Let me do 7%.
whoever's going to be buying this is probably going to be using it as an investment
and a lot
vehicle.
of these terms, guys, are going to be confusing. Just repeat. I remember when I first taught Andrew about cap rate, he was like, wait, every single person I've ever taught about cap rate. Wait, what? I don't get this. And then sure enough, they do 20 examples like, oh, got it. Right?
Sensei.
All right, income. I'm going to go detail on the income, number of units. So there are, I'm going to do 1.
Yep.
1. I don't care how many square feet it is. Current rent, let's call it 550. Market rent, 550. I'm going to add another one. Number of units, 1. 2 bedroom, 1 bath. I'm going to call it 1,000 square feet. Current rent, 900. Market rent, 1,150. Add another one. 2 bedroom, 1 bath, 800 square feet, current rent 850, market rent 1095. So what I did here, guys, was...
And that's on the lower side of what you were... I was saying 1150, and you're like, come on,
no,
Andrew, it's going to be...
1250.
Okay.
Rewind the tape.
Put it up higher.
No, I'll put it...
Give one to you and one to me. Hit the edges of it.
Okay.
Rewind the tape, this guy.
So, guys, what I did here was the current rent is where they're currently rented at. The market rent is, if we renovated it, this is what we'd get. But since the one's vacant, I'm going to put the current rent the same as the market rent.
Yeah.
Any other incomes?
None listed.
Then we're okay, moving on. But you can add your laundry, late fee, pet fee, month to month. By the way, I never add in late fee. I never want to give the previous owner credit for renting to people who pay late.
Now, even though I said none listed, for the purpose of, and again, this is one where you can take it on and off and we can play with that later, but every single home we have in this area, we charge a flat amount for water and sewer. Water and sewer is very expensive. It's customary in the market. It doesn't show that this guy's charging it.
So
at least on
more
this.
upside potential there.
So I would sit there and definitely include, I mean, on the studio, maybe it's only $40, but on the others, $75 a month.
Okay. So what's the property tax? So now I'm going to the expense side. I'm going to detailed because you can write a basic like, hey, per unit it's this. But what's...
And this is where I save you the time and I look it up for you. 3.586%.
Fuck Cleveland Heights. Management fee. Now, guys, usually I put a management fee in here, but if you're buying this for yourself to manage yourself, I'm fine if you don't put a management fee in there. I still think you should, but I get it. If you're going to manage yourself and your goal is to buy 1 property a year and have 30 when you retire, you can manage all those by yourself. Okay, no leasing commission. What's insurance on a property like this? $1,500, $1,250?
I would do, yeah, $1,250.
Okay. Maintenance staff, nothing. You're going to do the maintenance yourself. Leasing staff, nothing. You're going to lease it yourself. Property manager, cost, nothing. You're going to do it yourself.
And by the way, when you're saying maintenance staff 0, yes, that means we're not going to have a full-time person there, but we just got the next section, maintenance and repair. This is when we may be paying for a third-party person like a plumber or electrician to come in the house.
Yep.
So we're not saying you have to do all of the work.
Yeah.
But this section's where you're paying for it.
So I'm going to put in here for 3 units per year,
Hit me.
$2,000.
That's fair.
Okay. CapEx. I'm going to do $1,500 per year.
I like it.
So CapEx is like, hey, every 5 years you got to change a furnace. Every 20 years you have to change a roof, things like that.
And there were no pictures of those type of things in this. That may be something later on. Maybe we go walk the house before we buy it. Like you said, I walked in for 3 minutes and I go, okay, here's what it is. You could walk in, the basement's immaculate. The furnace is brand new. The air conditioning's rewind. There is no air conditioning.
Window
But
units.
if everything in there looks brand new,
But guess what? If you spent the money on AC, how much more in rent could you get?
you could get more. Even with existing tenants, when they're coming up on a renewal, You just go up to them and be like, hey, I'll tell you what, for an extra $125 a month,
I'll
put AC.
Yeah.
Are you in? And it may be harder for you to actually lease that in the open market because everyone's comparing it. But the guy who just lived there for 12 months may be like, yeah, I'm going to give you that 125.
100%. Advertising, 0. You put a sign up front, you put it on Craigslist.
It'll go.
Yeah. So I'm not even putting advertising. Accounting, nothing. Landscaping. Who's cutting the grass? We probably are.
It's a postage size.
Okay.
There's nothing.
So 30 times, it's still $600. Snow plowing.
Triplex, there's going to be cars everywhere in the driveway.
Yeah, so you need a snow plow. Oh, you're right.
No, you can't get the plow down the drive.
So utilities. We didn't charge for the utilities, so should we put the expense in, Andrew?
Gas and electric are going in tenants' names.
Right, so water, sewer.
Right, so you're going to have water, sewer. And I see what you're saying. We didn't sit there and say, hey, give me the reimbursement back. So,
let's put a vacant.
I'd put something in for gas, electric, water, sewer. We're having some sort of a vacant utility factor.
300.
That's fine.
Okay. And there's other expenses in there, things like permits. There are permits in Cleveland Heights. How much are the permits? 125 a unit? Or house address? What is it?
Do $150 per unit.
Great. Congratulations, Cleveland Heights. You win. Idiots.
Stay continued for another.
Good boy, Cleveland Heights.
Yeah, there's a longer story for Cleveland Heights. We'll get into that. Hopefully that ends.
Here's my impersonation of the east side of the suburbs. Paul, Andrew, why don't you buy more properties here? We love what you do. Your property taxes and your fees are too high. But we need it to be that high. Why are rents so high? Because your property taxes and your permit and your key fees are too high. But we need more tenants here. Your property taxes and your blah, blah, blah is too high. Okay, next. So guys, I want to go back here actually. $6,200 per unit in expenses. Okay. It seems about right, but these are pretty low. I didn't put a lot of expenses in here. Like if we were buying this, we have to put a lot higher expenses in here because we have a management team. If you're buying it to manage it yourself, you don't have to.
So go to look at CapEx. You said $1,500, right?
Yeah.
If you're buying a single family home that let's say was renting for $1,000, what are you putting for CapEx? Probably about $1,000? Because you still have all the roof, furnace, drive, correct?
Yeah.
So instead of $1,000 per unit CapEx, we're actually at $500 because it's a triplex. So we're getting 3 different income sources pushing towards that CapEx.
So I'm going back to rehab here. I forgot to put rehab in. What are we doing for the rehab? Honestly, my thought was like...
So let's start top bottom.
Honestly, my thought was like total $17,500 for all 3 units combined.
Yeah, I'll be fine because the top didn't need too much.
The top didn't need, but I want to do new vanities, new kitchen cabinets, new flooring in the kitchen, some of the kitchen, all that stuff.
Yeah.
So $17,500 total. I'm going to do...
Remember, so this is a good one. You've got 2 units that are occupied right now.
Yeah, so I'm going to do 33, 33, 33. 34, because it's got to add up to 100 in our software. Expenses are done. Refinance. All right, I'm going to refinance at the end of year...
So when you did 33,
7.
33, 33, essentially, you're sitting there going, I'll do one every year.
Yeah, but I'm going to still refinance at the end of year 7. Fees will be 1.5%. LTV, 75%. Interest rate, 6.
So sorry, why are you doing 1.5?
Because banks charge that for financing. Then I'm going to do a refinance at the end of year 14. Same thing.
And again, what does a refinance do? If you're the investor, you put your money in.
Equity. Sucks out equity. Allows you to go buy more property.
And so if someone comes in, they suck out, I'm going to make a number up. They suck out 60 grand.
Yeah, that's tax-free.
Exactly.
And you can go buy another property. So guys, I don't know what the interest rate's going to be in the future. I have no clue. But I have to make some sort of assessment. Like when interest rates were 3.5%, we were still underwriting 6% in our refinance. Why? Because we're like, it's probably not going to be 3.5% 7 years from now.
Yeah, I don't know if we're going to hit hyperinflation, but if we do, we're probably not going to be selling. And if we're on the buy side, then it's, again, the rental rate and everything moves along with it.
Inflation is the friend to real estate.
It is.
As you've all seen from home prices lately. All right, so I'm doing 2 refinances here, selling it in year 20. Now my regular mortgage, I'm going to do 75% LTV, 6.5% interest, 25-year amortization. Create deal. Now here's the recap of the deal. Oh boy, value of the property just plummeted. Oh, that's going to be bad. So let's just go right to the IRR page. Negative IRR. All right. Yeah, this is crap. At my price.
Well, one of the
350.
easier ways is to change the price.
Yeah.
So if the price is too high, you need to adjust the price.
Let's go down to 262.5.
And again, remember, Paul's doing this blind. When you're sitting there doing it, you're going to have the number already, so you can plug it in.
Look at this. There's negative
Poor Paul's
cash flow.
got to just guess.
And by the way, these first 3 years of negative cash flow are because you're renovating the units.
And you're not getting the money.
Yeah.
So our software is saying the year that you're sitting there and fixing it, you're not getting any money.
And in year 7, when you refinance it, you got to put an extra check down.
So I might tell you when you're doing the underwriting, if we're really trying to grab this deal, Paul, I would probably say
This is a crap deal.
There are 3 units, right? We could get that rehab done in 2 years easy.
Easily.
So why take the negative cash flow for all 3 years?
Yeah, that's true.
So I would change that, and I would adjust your purchase price to try to figure out where does it actually make sense.
Andrew, I don't know where this freaking makes sense.
Well, that's part of your job is to find it. So go back to...
I mean, look at the cap rate. Even if I do a 5.5% cap rate.
So focus on the price.
Yeah, I am focused on the price.
Well, you can't... So our slider sits there and moves by, what, 25% up and down?
Yeah.
So go back to the main page
So if I were looking at
and
this right
adjust
now,
it down.
250 is my price. Because look, I'm at 262.5, and I have a return of 13.5%. So I guess you can justify 262.5.
Move your cap rate back, because I think you also slid that. Put it back where you started. So what do you need to be to assume that?
Basically 250.
So is that the magic number, 250?
I'm still coming up with a down payment in year 7 when I refinance. I still have to put more money down. I mean, honestly, my number is I'm not buying this.
Where would you buy it?
Probably 200.
Let's play that out.
Probably 200.
Go to the main screen, drop the price so you can slide the bar a little lower. So start at 200 and work your way up and down.
No, 200 is too low. If I'm buying this for myself, yeah, I'm probably around 225 high side.
So at 225, and here's what I'm looking at. You talked about, most especially when you go to refinance, the last thing you want to do to refinance is what?
Write a check.
Put more money down? Then why are you doing it?
Yeah.
Right? You're not going to do that.
Now in year 7, I'm getting a $94,000 check.
Yeah, you're getting money back.
Yeah, so I'm at, and by the way, guys, you might sit there and say, well, if they're asking 400, then you're not going to get a deal done. Okay, then it doesn't get a deal done. You got to be okay to say, fine, I'll find another deal. That's why don't spend a lot of time on deals. That's why Real Estate Calculator is useful. It allows you to quickly screen through these so you don't fall in love with a deal and say, I have to buy this deal. I made that mistake once before. It cost me $1 million. Don't make that mistake.
And the faster the more deals that you do and the more deals that you underwrite, you'll be able to look, and again, personal preference, but as you guys start using Real Estate Calculator, being able to use this slider, you're able to see what are the major things that are affecting my deal. Is it rent? Is it price? Paul, take your interest rate. We talked about that, right? Or LTV, debt cost.
Yeah.
Play with those. Show how much that's changed things. So if your debt goes up by 1%, and you're like, oh, shoot, I missed the best time to go do it. Is it killing your deal?
No.
It's not really changing it that much. So as much as people are sitting here focusing on, man, I could have had, interest at 4%. Now I got to go get it at 6.5%. I'm not doing the deal. It really doesn't change it over a 15-year, 20
Plus, the color of this
period.
house on the outside's ugly.
Well, again, you got 20 years to go paint it, Paul. Are you a good painter?
I'm a really good painter. I don't think I've ever seen
Fun
anybody
fact,
paint.
everyone. Paul's the worst painter I know. Second that. His brother might be worse.
Mikey's worse?
Quick story. We were painting an apartment.
In Columbus?
Columbus.
Yeah, I painted right over a lake.
Paul was
sure.
sitting there and he was painting all the walls in. I'll call it. He had the big brush and he's rolling the walls and doing all that. And I had the little brush and I'm cutting around ceiling fans. And then to save time, I see him go to the ceiling and he just goes right over the ceiling fan. And he goes, we're going to replace that anyway.
All right, so do we have a price here?
I've got a price.
It's probably really high.
Ask price. What was your number again?
My number is like 225 on the high side.
What's the price?
No way.
Tell me it.
225.
225 on the button. Look at that.
Wow. Wow.
So we also talk about,
Wow.
you said something nice. You said higher interest rates becomes our friend, right? And how much have we seen deals starting to get back to a little bit better, right?
Wow.
Oh, look who's excited over there.
Wow.
See, but this is something that someone can, what's your down
Wow.
payment? Oh, here we go. He's stuck.
Wow. I think I'm getting a little tingle in my jingle.
We're going to have to take a break.
Wow. Remember one thing, it doesn't work for us because we have a lot more costs. But if you're a person who wants to buy one property a year and can afford to spend 50 grand buying a property, sounds like a good start.
Look, there's other things when you say, well, is 225 a good price? Let's say you were coming from, we have viewers that are coming from Georgia, Florida, whatever, that
don't buy this property if you're out of town because
they may want to, right?
But our expenses didn't factor in outside management.
And that's my point. You'd have to get an outside manager who's going to charge you a property management fee, and they're going to charge you to rent the unit. So you got to factor that.
And they're not going to do a good job. They're going to have really high costs for your maintenance, and they're going to want to have the rent be really low because they're going to say, "Oh, you want it full, don't you? At least it pays the mortgage."
So, do you like property managers?
If you think by hiring a third party, if you believe that hiring a third party manager is smart, you are the sucker at the table. You're absolutely the sucker at the table. Absolutely 100%. I saw on Twitter recently. By the way, follow me on Twitter. I saw on Twitter recently somebody goes, if you want to get into real estate, you're stupid for managing your stuff. You got to hire a third-party manager because your best value is finding more deals. I'm like, finding more deals that your third-party manager can fuck up for you? No. We've hired how many third-party managers in our life?
And who made the most money while we had a property manager?
Not only that, forget about that. Forget about the fact the third-party manager made the most money. Every time we fired them, expenses went down, rents went up. Every single time. And finally, Andrew and I just started to go, okay, we're the idiots here. We just keep hiring.
Because we keep doing it.
We keep doing it. So we just decided not to. And guess what?
Times have been much better.
Yeah.
I will say, I didn't have as many gray hairs.
Oh.
But there's a couple of reasons for that.
Poor Peanut. Yeah. Wow, 225. Did you get excited when I said that before?
I didn't want to feel like I was guiding you a little bit because you were trying to quit around 250.
I actually thought with your eyes, I was like, oh my God, it's like 450.
You were trying to quit.
Yeah.
You're like, 250. I don't want to buy it. I'm like, come on, give me a number. Give me a number.
Wow. If you're in the Cleveland area and you want to own real estate and you have $70,000 down, you have $100,000 in your bank account, $70,000 down. Guys, remember, I don't like emergency funds except for in real estate. You need to have an emergency fund in real estate because that does give you a way of having buffer. I don't believe in emergency funds for your personal living. Have a credit card, have it zeroed out, put your Netflix membership on there and just pay it off every month. That's your emergency fund for your personal life. You need to deploy capital to invest. But in real estate, you absolutely need an emergency fund.
People move out. People get evicted.
Furnaces go out.
They ruin your home. You have to have a couple extra bucks sitting somewhere in the wing.
Yep, have to.
But how much do you think? Okay, so 225. How much would you have to put down to buy this?
Well, according to this, 70. I put 25% down payment.
Correct. But remember, as a triplex, because it's still considered under the single family,
and that makes your return a lot better.
You could probably even push closer to 90 if you keep it in your personal name. That's a whole nother thing.
So 90?
Because you're not going into commercial financing. You're still in single family financing.
Let's just go with 80 here. Wow, 21% return at 200. Sorry. Let's go back to 225. 15%. Not bad.
But even in there, are you going to try to sit there and get yourself a better deal?
Of course.
Right. But at least you know where it starts right now, you have a deal. And anywhere you can go is just giving yourself a little bit more wiggle room.
215, you're at 17% IRR.
Yeah.
All right. Well, if anybody buys this in the Cleveland area that watches this episode, we want a check for 2% of the purchase price. Thank you very much. Or just sign up for our software because you're dumb if you don't.
Look, Real Estate Calculator, whether you're doing a single family, a quad, or you're even trying to buy an apartment building,
it works for all of them.
It's going to help you.
Yeah, absolutely.
Awesome.
Thanks, guys. Appreciate it. Again, webinar next Wednesday, 1 p.m. What time? 1 p.m. Eastern time. Webinar. Click the link below. It's free. Sign up. Thank you. Take care. Wow,
cool.
220.